Hello, and oh, there I am. Wow, I wasn't expecting that. I wore that jacket yesterday, I'm glad I'm wearing it today. Hello, and welcome to the B2B Fintech Deep Dive, sponsored by Transcard. I'm Mike Neumeier, the CEO of Arketi Group. I'll be serving as the MC between now and lunch, so I'm keeping you between food. Our first segment is going to be a fireside chat between two payment innovators in the industry, Mastercard and Transcard, on how organizations can accelerate their digital transformations. Allow me to introduce Felipe Lopez, Vice President of Global Partnership and Segments with Mastercard, and Timara, Vice President of Strategic Partnerships of Transcard, who's also going to share a few remarks with us because Transcard has been gracious enough to sponsor this deep dive breakout. So guys, you guys are the main show. I turn it over to you.
Thank you, Mike. Good morning, everyone. Transcard is proud to be a sponsor of the FinTech track today. And for those of you who may not know us, we are a global payments platform embedded with a system of record connecting the bank account for businesses to streamline those AP and AR workflows. So simply put, we're making it easier for businesses to make, manage, and receive payments. An internal motto that we use at Transcard on our emails, teams, meetings is "Let's go," which I think fits in perfect today. You guys have a lot of great sessions, and we're looking forward to being a part of it.
Let's start.
All right, we're not a time.
Let's go.
Nicely played. So our fireside chat today is around B2B digital transformation. And what the core of this means is really finding solutions for businesses' pain points. So that's what we're going to focus on in our talk today. And Transcard has a great story with that. We started out as a fleet fuel card platform. And we did that for one of the country's largest trucking companies, sold that technology to US Bank. And then to transform and stay relevant, we used that baseline technology and created an agnostic payments platform. And this was for businesses to have visibility and be able to catch up in the B2B workplace with what we've been doing with B2C. So I like talking about the consumer mindset, right? We're used to B2C workflows. We know Venmo, I'm sure a lot of you even used it this week. You go to lunch, you split a payment, you get that payment instantly. Why should it be any different in B2B? As a consumer, we take that mindset and we're bringing it into the business world. So, if we're paying a business, why should we have to wait 7+ days? These are pain points. Transcard heard this, they listened, and they adapted. So on that, with the evolution of payment modalities, Felipe, tell us about Mastercard, how they evolved, and there's so much more than just corporate cards.
Certainly, thank you, and good morning, everyone. I think for us, the key principle here is to provide choices and options to the businesses, the same as we have it in the consumer world, right? We believe that forcing to just you need to pay by card, etc. That doesn't play. But what we believe is to provide the different choices to pay and to get paid. And what we have found is as long as they have different elements which are critical for businesses, right? So they need to be safe payments, they need to be smart payments, right? Contain a lot of aid information, and I think we're going to be talking a little bit more about that. Speed is obviously critical, as Timara was mentioning, we don't want to wait 7 days to make a payment happen, right? That doesn't happen on the consumer world. And the last one is, benefits, right? We all as a consumer as well, we have probably 4 or 5 different credit cards, and sometimes we play with them based on benefits, right? On the billing cycles, on the rewards, etc. So same thing happens on the business world. And again, businesses should have the ability to pay by check if they want, by cash if they want, but by ACH, by cross-border payments, or by virtual cards. And the reason why we also believe that's the way to go is, as well as the consumer, when we see more digital payment, we get the adoption when we can compare the benefits, right? So we are seeing that on virtual cards, right? We're seeing a great momentum across many different industries. Why? Because they're fast, they provide the ability for businesses, for both buyers and suppliers, to negotiate different payment terms, right? So there's a benefit from cash flow, rebates, it's amazing what we're seeing. Just to give you some information, in a regular purchasing card, the average size of the transaction is around $300. When you take that to a virtual card, given all the benefits, etc. they have, it goes up to $5,000. Companies that have embraced virtual card payment with their suppliers have been growing their share of suppliers that have cards is currently around 27%. So once they taste it, they want to do more. So I think that's our approach to look.
Yeah, you bring up a great point. And in this room later, they're going to talk about this topic, so be sure to stick around. But let's discuss embedded finance. So traditionally, businesses, as you're talking, they've struggled with payments. It's a lot of manual processes and workflows. Sometimes those are missed payments or lost payments. How do you see this pain point being solved?
Well, I'll leave it as I was mentioning. We believe this is a pivotal moment on B2B. The same way it started with consumers, getting the payment exactly where you live, where you operate, right? Uber transaction, right? Is a very or any e-commerce transaction, right? On Amazon, etc. You just concentrate. You want to see what you want to buy, right? You want to enjoy the ride, but you are not worried about how do you get paid, right? The same thing is happening on B2B, and I think our mission as Mastercard and obviously working with partners like Transcard is to make that happen, right? We don't want companies to worry or get concerned about the payment, how long it will take, having operational teams doing the reconciliation. We want companies to concentrate on doing products, designing, delivering new products, and worrying about their customers, not about the payments. So I think that's something that we're seeing now. Obviously, in the business world, this means that the transaction needs to happen in the platform where companies operate. And that's what we're seeing much more frequent. Obviously, ERPs, expense management, AP automation companies, etc. All of them are realizing that that's what businesses want to do, and they want to do it in a much seamless way for that to happen. The same happens with the suppliers, for example, right? So they just want to receive their payment, right? They already sold the product, etc. They want the money in their account. That's it, right? And I think as an industry, we still have some work to do. Just to give you an example, majority of virtual card payments still happens or still are received by email for the supplier, right? So it happens that the supplier is calling buyers saying like, "Where's my payment?" And it's like, "Dude, that email you received probably 5 days ago, and it wasn't the right?" So again, that needs to be improved. We are working on initiatives like straight-through processing, which solves exactly that, right? The payment gets authorized, and then the supplier gets a notification that the funds are ready in their account. So all that is happening, and again, there's a huge transition on B2B payments to mimic what
Yeah, and you talked about businesses putting in the work. I think Transcard has a cool story about this. When we went to market, we actually tried and tested it in-house first. So we, with our Sage Intact, put together our Smart Suite solution, and our accounts payable and receivables team tested it out. We wanted to make sure before we go to market, this is going to change and we're going to solve these industry pain points. And so now we've eliminated these multiple logins from the bank accounts, from the other old existing portals that they were using, and they're actually our biggest advocates that we have. And we did a case study internally and found out that we're saving them over 100 hours a month with our solution that we've created from our B2B platform, which is pretty incredible, right?
Yeah, I mean, what we're seeing as well is going to that point. For example, let me talk about ERPs, right? ERPs are moving from being the system of record and just providing files and data to be more a system of engagement, right? They want to be closer to the company. They want to interact more with the company. And what we're also seeing as, companies are getting a lot of different platforms, and it's getting very complicated for them to operate. Right? So similar to consumer, right? The one-stop shop is something that they're looking to have. So they want to embed into the platform, data, right, for companies to take the best optimal decision, for example, on cash flow management and more things, and payments as well, both on receiving payments, doing payments, and interacting with the banks. That's why, for example, we're very happy to partner with Transcard, because that's kind of the right model that we see in place, right? So working on both the AP and the AR, offering multiple payment methods, offering data that Mastercard provides through Transcard, and Transcard data as well. And the connectivity with the banks, right? So it covers all the different aspects for a one-stop shop experience for the company.
Yeah, you bring up a good point too. When businesses are introducing a new concept or a product, there's a lot of reluctancy to change, and we're like that with consumers too. Remember, we used to have the flip phones, and then everybody went to iPhone. Now we can't get away from iPhone. This is where I think education plays a really important role on the go-to-market. Internally with Transcard, we talked about we went to market directly within the ERP, and we saw that there was still a lot of companies that have legacy systems. So, we have to continue to listen and learn and evolve. So our own internal data team, mode, right there, they listened to this and we adapted. And so we've opened up our APIs so that any type of business can now connect to us, which is constantly trying to stay 10 steps ahead where you want to be. For businesses, Felipe, how do you see B2B platforms scaling when we think about this constant growth that we're in and trying to keep up with?
Yeah, we believe that in order to accelerate adoption, and we are seeing different examples. There are three main things that we believe businesses needs to have in order to get adoption. One, I mentioned at the beginning of the conversation about having different options, right? So we don't want to tell companies, hey, forget about canceled checks, etc. It's only cards. Yeah, you can still write the checks, do all the manual, potential frauds, etc. You have cards, you have ACH, you have cross-border. So providing multiple options is critical for getting adoption. Second thing very important for businesses is awareness of the benefits, right? And we're working in Mastercard to provide a lot of data to companies directly, so they are aware of, probably is 20% of my suppliers already accept cards from other buyers, and if I am able to have this mix of payments rather than the one I have today, this is how much I'm going to get in cash flow, this is how much I'm going to get in rebates. So making them aware of the benefits and the cost of the existing way they get paid and they pay today, I think that's critical. And the third one is making it easy for them to connect, right? And that's what Timara was mentioning. and Transcard have been doing a great job on providing API connectivity, directly integrating into the ERP, directly integrating into the bank that they operate. So if we can make it easy and accessible to them, I think that reduces the barriers.
Yeah, so we've been talking a lot about the front end, the user experience, what it's like for the accounts receivable team, etc. Let's turn around and think about back end data and visibility and how that's changing in parallel too. What current trends are you seeing in Mastercard?
I think we believe that in the next probably 12, 24 months, that's what we will see a lot of evolution, a lot of the role of the fintechs, I think that will be there. So the combination of open banking for businesses, in consumer, we know perfectly, it's very well established. I think open banking will grow tremendously for businesses. The other one is AI. I think there's tremendous things to do, obviously, on AI, to treasury optimization, to even manage the relationship with suppliers, etc., etc. Third one is obviously the participation of ERPs, right? Like providing the holistic data for the business and getting like third-party data as well. Like as I mentioned, like Mastercard, we're providing aggregated data directly to the businesses as well. So if we combine all that, then definitely we believe businesses will have much more information in order to make the right payment strategy, I would say, to optimize their cash flow. Businesses are looking to optimize every single side of the business, and we believe, payments is something that we see a lot of the companies getting a lot of attention. And again, I think that opens up a lot of good opportunities for the collaboration between fintechs, companies like Mastercard, banks.
You bring up a great point on AI. I know on behavioral data, how we interact, what we remember. We're doing it from B2Bs, from making payments. We remember how you paid that vendor the last time. We're suggesting how you should pay a vendor. We're trying to make it as seamless as we're experiencing in our consumer world, our business world, but we're still a little behind, right? So it's this constant evolution and transformation. So we're actually going to open it up for Q&A, but before we do that, Felipe, any closing thoughts around the acceleration of B2B digital transformation?
No, I mean, probably you notice, I'm so excited about the momentum that we're living on B2B. I think definitely what we saw on consumer 10 years ago probably is getting in on businesses, but it has a different relevance on businesses, right? Not only the benefits that they can have, but for example, if I start talking about specific industries, right, where B2B payments get a different shape, also opportunities, get much bigger, right? Talking about freight, talking about healthcare, CPGs are doing things on B2B payment from small retailers to France. So it's a huge world, and again, I think great opportunity for fintechs, Mastercard, and financial institutions to collaborate.
Thank you. All right. I know you guys are excited out there. Anyone have a question for Felipe? All right. Here.
So what do you guys think is the biggest pain point in the industry when it comes to commercial payments, and specifically for businesses wanting to pay their suppliers?
My point of view, and we're seeing this as we grow our B2B volume, is awareness, right? So it's awareness from the buyer on the opportunity that they have to optimize, and there's also awareness on the supplier, right, on the benefits that they have as well on accepting card payments. We know when you start getting into card payment, just talk about that, you open up a window of negotiation between buyers and suppliers, and that could improve liquidity for both sides. Right? So when both sides of the equation understand there's benefits on that, they realize that there's a cash flow benefit, which is obviously very important, but then they get a reduction in operational costs, they have secure payments, etc., etc. And that's why I was sharing some data in terms of, buyers starts probably with less than 5% of their supplier accepting cards, but once they start getting into this modality of payments, that goes up all the way to 27%. Again, probably there will be 30% of suppliers that they could have another payment alternatives, right? But the overall mix gets totally optimized and the cash flow gets optimized.
Thank you. That's a good question. All right, Red.
We can hear you.
Yeah, my voice is Gary's, I guess. I think one of the biggest benefits is that data that you were talking about, but it's also probably one of the biggest fears for some players coming to the table and saying, how do you data, how do I protect it? I think from a two-party aspect, you're bringing both of your data, but then you can add both upstream and downstream. So how do you bring all those people together and say, okay, here's our data play with this, and here's how we're going to do that. How do you approach that besides just the contracts?
Totally. So obviously, data security, as you can imagine, is huge for Mastercard. We work obviously with the information from the company on the ERP side. We work with aggregated data, for example, so we don't get compliance issues. But we also work on a concept. For example, we're releasing a concept called Open API, right? Where based on our policies on data, we're able, for example, let me give you an example. We're able to provide companies, for example, an employee's on talking about T&E, a real-time notification of your transaction, right? That needs to be approved by the administrator of the company or by the employee itself, etc. So we follow very strongly our guidelines on data, and we believe that's a principle we should follow.
In addition to that, Transcard has connected the buyers and suppliers network from Mastercard. So whenever a customer comes as a buyer or a supplier, they can operate with Mastercard and Transcard in this network to move the money, also the expectation of finance, liquidation, all those things. So any easy payment methods, complete digital open banking, you have FedNow, other bank payments, instant payments. We operate on those platforms. In addition, we provide this network individually for Mastercard or business coming as a buyer or as a supplier to receive or send this.
Almost like a pre-approved network. We've already done analysis and security is all.
Yes, completely secure, compliance, onboarding, easy onboarding, and seamless transactions, completely APIs, and high volume on Azure software.
Well, thank you all for having us today and joining our B2B session. And if you want to learn more, you can find Felipe and I around. Thanks.
Start our next session here. Everyone knows how complex financial ecosystem is, especially when it comes to getting payments in the right place, not just for consumers, but for businesses. Those of us that own businesses know that it takes far too long to get the money in the right place, even in today's digital world. Our next section is going to explore how B2B payments are modernizing through interoperability and connectivity. Ernie Martin is a board member of the Digital Business Network Alliance and founder and CEO of Receivable Savvy. And Cassie Quimby is Senior Vice President and Head of Payment Systems Improvements for the Federal Reserve System. She's going to guide today's conversation. So take it away, guys, no pressure.
Thank you. And I'm sorry, this goes until what time?
This goes until about 11:30.
Okay. Thank you. Great.
We'll give you a little card.
11:25. Right, exactly. I saw those in the back. Well, thanks for joining us. I think this is a great opportunity for us to come talk to you a little bit about some of the work that we supports business-to-business modernization, and we're excited. This has been years in the making, and I think we're finally at a point where we have, real things in industry that are happening. So we're going to be moderating today. Just to give you a little bit more about what I do and Ernie, I head up payments improvement for the Federal Reserve. My group tries to support advancements towards desired outcomes for the payment system that we have in the Federal Reserve to do with like payment accessibility, efficiency, and integrity. So we're thinking kind of at a high level about where there are opportunities for advancements that way across the ecosystem. And we do all of this work very closely tied with kind of in partnership with the payments industry stakeholders themselves. So we're strong kind of partners, supporters of advancements in this way. Ernie Martin, who outside making us sweat a little bit, but that's okay, well worth the wait, is founder and CEO of Receivable Savvy. He's also a board member of the newly formed Digital Business Network Alliance, DBNA. Ernie's been working with us for several years through the Business Payments Coalition to kind of address connectivity, interoperability issues as it relates to B2B payments to try to help advance us towards efficiency in that space. So.
And thank you, everyone, for your patience. Atlanta traffic is wonderful, as some of you already know. But glad to be here. As CEO of Receivable Savvy, we've been doing research and content development specifically around order to cash. So everything from invoicing all the way to cash application. We've got research data, information that nobody else gets because we actually ask the questions. So we're excited to be here and looking forward to jumping in and sharing some of my experience about the Business Payments Coalition as well as the DBN Alliance.
So let's jump right into it. Can you talk to us a little bit about why the work of the Business Payments Coalition is so important as it relates to this topic?
Yeah, it's critically important because when you have invoice to cash, you have a lot of manual processes. And Europe, in many ways, is further ahead than North America. We still, in our personal lives, many of us still use checks, right? But the transition to electronification of invoicing as well as payments is something that the Business Payments Coalition wanted to address. Now, there can't be a fiat, the government saying, hey, everyone's going to do this. So we had to figure out a way to build a network, a platform that would be attractive to not only suppliers, but businesses and buyers on the other side, as well as make it amenable to solution providers as well. So this work has been really important. A lot of detailed technical information that is way above my pay grade, but because of the research that we do at Receivable Savvy, we had some insight in terms of this is what suppliers want, and this is what buyers want. And really what they want is straight-through processing. So if the invoice goes through to be approved and is paid and cash application with remittance is delivered to the supplier at the end result, then that should be as touchless or as manual as possible. And so that's where the straight-through processing comes into play. It's sort of the holy grail, if you will. And so the Business Payments Coalition with the now formed DBN Alliance is actually working towards that and making that a reality.
Can you tell us a little bit more about just the exchange framework and how it works?
Sure, the exchange, so if you've got a supplier submitting an invoice to a buyer, there are usually a number of solution providers sort of in the middle. And we know many of us know who those solution providers are. And so what they do is they take that technical data as an invoice and ideally pass it through their organization or their platform as touchless as possible, and then deliver that into the buyer's accounting system, again, as touchless as possible. Ideally, on the buyer side, they can review, approve, and pay that invoice, again, ideally without any manual intervention. And so the framework itself, which we call sort of a four-corner model, which you have the supplier on this side, you've got the buyer on this side, and then you have two touch points for solution providers in the middle. So we call it a four-corner model because there are typically four players involved. So that supplier submits the invoice to their solution provider. That solution provider sends it to the endpoint where the buyer resides, but another solution provider, or the same, takes that invoice, electronifies it, and submits it into the buyer's accounting system. And so that platform is designed to be seamless, touchless, and it actually introduces another holy grail topic, interoperability. And so interoperability being that, boy, if I was a supplier and I've got 25 customers and they're all on 5 or 10 different platforms, e-invoicing platforms or other platforms, I've got to have a separate touch point at each of those individual solution providers. And so ideally, as a supplier, I would love to be able to enter into a platform, not only submit invoices to my customer, but if there's another customer that's not on my original solution provider platform, I would still have access to them. And so that's why the exchange framework is so valuable and so important, because it brings in and ushers in interoperability, where suppliers can submit invoices, but also have access to a number of different customers who were not originally on their first solution provider platform.
So you covered this a little bit, but there's a stat that I think is kind of surprising to hear. There's estimates out there that say that it costs as much as $30 to process an electronic payment and reassociate the remittance information with that payment at the end. That's pretty surprising.
Right, and that's an average. So you might have some that are less costly, you might have some that are more costly. And again, it boils down to how many hands, how many eyeballs have to actually manually touch it. And so those costs are astronomical. And so what happens is, customers who pay the invoice, they've got remittance data ideally, but the question is, how do you deliver it to the supplier? If you're writing the check and giving that check to the supplier, typically the pay stub has the remittance data, has the information, but ideally we're trying to move away from checks. So, and I've spoken to some suppliers during our research who say, I love checks. So why do suppliers love checks? They love checks because, number one, it has remittance data. Number two, some just like to feel it in their hand, which is very 1970s, right? And then others just don't want to change. And so the challenge is, how do you attach and add in a seamless way, in a way that allows the remittance data to be retrievable and usable? How do you incorporate that into electronic payments? And so that's the next phase of what the Business Payments Coalition is working to achieve, is creating a remittance framework so that information sits there and is easily retrieved by the supplier organization.
That's right. And so just a little plug on that. So in market right now, the invoice piece has been taken care of. The exchange framework is available kind of general for anyone interested through the DBNA to use it. The Business Payments Coalition, with Fed support, kind of just facilitating this, is launching a pilot for the remittance side. And we just closed our expressions of interest opportunity on that, but if there is interest in the room, still submit it to us anyway, because we're still taking in members to support this pilot. It's going to be kicking off in another week or two, and it's set to go through kind of mid-2024. But the idea is that it's going to, we know the process basically at this point for how to pilot this stuff, and we'll get to the remittance side, so we'll have the full kind of, out there.
Yeah, absolutely. And any organization that is interested or has some interest as to how this works, I encourage everyone to simply just get involved. And so getting involved, you're able to see what goes on behind the scenes, understand and influence the technical standards in terms of making this a reality. And so at the end of the day, everyone benefits, because if suppliers love getting checks that have remittance data, then ideally that electronic payment would have that same information and usable in actually a better way, because ideally it's all touchless.
So you talked a little bit about this, but maybe we can give us a little kind of thought on what the business case might be for the solution providers, if they're thinking about how they might want to adopt the exchange framework.
Sure. So, you've got solution providers, and just let's make it simple. Let's say you've got a number of e-invoicing networks that are out there that are engaged with suppliers and buyers. Sometimes some buyers use one or multiple solution providers. Oftentimes, suppliers have several, and I've known some suppliers who have literally dozens of solution providers that they work with, because the customer is the one that sort of drives the bus, if you will. So the customer may say, yeah, I want to use this solution provider. I've got X number of suppliers, and every supplier I want to be on this platform. So you may have another buyer who has X number of suppliers, and of course there's usually some overlap, and a good cross-section of suppliers that are serving both customers. And so when you do that enough, you have suppliers who have literally dozens of solution providers that they work with. So for the solution provider, one of the differentiators is, hey, we've got the best network and it's easy for you to be onboarded. Well, some of that changes because if you've got the best network as a solution provider, that changes a little bit due to interoperability. So if a supplier logs on and is using your framework, well, your network also inherently extends to other buyers as well now. So a supplier can log into your network, use the exchange framework, and now has access to multiple buyers. So that message about, hey, our network is better, our network is how we differentiate ourselves, that sort of changes more to something along the lines of customer service, technical assistance, and other things that may not necessarily have been at the forefront before, but now those things come into play, because it doesn't really matter if you log onto one network or another network or another network. The exchange sort of democratizes the entire universe, if you will. And so, yeah, I have multiple clients, multiple customers. So rather than using 25 or 30 different connecting points, I have one connecting point, and I can interact with multiple buyers at that point.
So if you reflect back on the work of the Business Payments Coalition to date to get to this kind of huge milestone, frankly, in getting this out, what do you think maybe, the biggest challenge that stands out to you getting it this far, and maybe what you're proudest of in terms of wins from that whole experience?
Yeah, I think in terms of wins, and I'll take that one first. So a number of organizations have participated in the pilot. And so going from the pilot to going live, we've had a number of wins where invoices actually go through. Invoices are standardized. The technical data is submitted through the framework to the customer. And so, in essence, it actually works. And so that's a huge win whenever you go from pilot to being live. One of the challenges is really making sure everyone understands that, A, it exists. Because I fall into the category, I just recently wrote a book called Nobody Cares About Your Business. And so it's because you have to make people care about what you care about. And so as the marketing lead and marketing chair for the board, my role is to make sure that we're, number one, establishing a message, and number two, that we're sharing that message and it's consistent in that it's being shared across our audience segments. And so that's probably the biggest challenge. It's a great challenge because it's brand new. It's not being mandated by the government, so there are reasons why suppliers and businesses and solution providers should sign up for it, engage in it, because there's a lot of benefit for each of the 4 core models that are participating.
I think we have 2 minutes, just confirmed. So let's open it up and see if we can get at least one question from the audience.
Hi, for Ernie, can you give us kind of a before and after snapshot of timing and cost? You gave some functional comparison, like just customer A, they did, this is the way it used to be, this is the way it is now. What was the magnitude of improvement that they saw?
Yeah, and that's an excellent question. So let's take the example of customer A, and I'll also throw in a supplier example too. So customer A, ideally they've got 20,000 suppliers globally in their supply chain. Okay, and so one of the challenges that customers always have is, how do you get everyone onto a single platform using the same technology, using the same process? And so usually you have customers doing different things with different supply chain segments. Okay, so you've got some using e-invoicing, you've got some using another solution where there's OCR scanning, PDFs involved. Then you have some holdout suppliers that are still sending paper. And so that's what it looks like before, where customers have people that they have to dedicate to handling those manual processes. So there's an additional cost to doing that. So with the framework, you've got a more democratized platform where your message to the supplier, to that 20,000 member supply chain globally, is no longer, hey, I know you don't have XYZ solution provider that you use, and we want you to use it, and you may be reluctant, but keep in mind that if you sign up and register and you're on the network, and you're on the platform, which doesn't cost suppliers anything, it's the same interaction and engagement they had with their solution provider before. So for the buyer, it helps to streamline and electronify their entire supply chain, which leads to cost reduction, time saving, etc. For the supplier, of course, as I mentioned before, there's interoperability. So if they had one connection with one customer, and they're happy with that, but they've got all these other customers, well, with the framework, the chances of them actually having access to all these other companies and customers grows exponentially.
Okay, we are getting the stop sign in the back of the room. So Ernie, I'll say thank you very much for coming and sharing this. If you guys want to get more information on this work, you have two ways of doing that. You can go out to Fed Payments with an S, fedpaymentsimprovement.org. We have a lot of resources out there on this topic and others, or you can contact the Business Payments Coalition directly, get involved in the pilot, get involved in their work more generally. I think there are a lot of opportunities here for industry involvement still. So with that, I'll say thank you very much. Thanks for joining us.
Thanks, man.
Thank you guys for joining us for this deep dive session, and thank you for Transcard for sponsoring it. We're going to go ahead and kick off on scaling a fintech business. Entrepreneurship lives at the heart of financial technologies today. Those individuals and teams willing to challenge the status quo and go against the grain are what makes fintech such an exciting field. Thank you. Building your business from the ground up is a tough job, though, and you've got a lot of competition to be on the lookout for the next great innovation that's coming around the corner. So to discuss that and scaling the fintech business, we're glad to have Stephen Walsh, founder and CEO of Quimby Solutions, and Maria Gregg. Stephen is Irish. Maria is not, but don't be confused. She's Senior Vice President of Financial Technology and Services from Enterprise Irish.
I'm an honorary Irish.
Honorary Irish. We're talking about Guinness here. They're going to share their insights on entrepreneurialism and the fintech ecosystem. So welcome them and welcome here.
Hello.
Thank you so much, Mike, for that kind introduction. So as Mike mentioned, I'm Maria, and I'm here with Stephen Walsh, CEO of Quimby Solutions. So Quimby Solutions delivers software development and design to fast-scaling fintech companies. And I just obviously have to say it's so wonderful to see an Irish-born company do so well in the US. And that's obviously a testament to you, Stephen, but I think it also shows how Ireland has positioned itself as a hub for fintech innovation. So I think it's really great that you're now here in a position to give some advice from your own experience to fintech companies that are emerging on the scene. And it's very timely that we're going to be discussing an important journey that all startups go through, which is going from zero to minimum viable product, or MVP, and of course beyond that. So welcome, Stephen, and thanks for joining.
Thanks very much. Delighted to be here.
So I think, Stephen, you're here wearing two hats. Can you tell us a little bit about that?
Sure, yeah. I'm here as CEO and founder of Quimby Solutions. We're really focused on designing and developing fintech products for our clients, VC-backed fintech startups. But also as a limited partner with the Fintech Venture Fund, and also we're the software development advisors to that fund. So yeah, we're really delighted to be here meeting startups this area, and hopefully we can show useful insights to them.
Absolutely, no, absolutely, and that's so important to highlight. You know how well you embedded yourself and how well you work with the local ecosystem here. And just a fun fact, I'm not sure if many people know how connected Ireland and Georgia actually are, and actually the similarities between the two. You know, both have emerged as fintech powerhouses, I would say, in the last few years. And there's direct flights from Dublin to Atlanta on a daily basis. There's really strong government connections as well on city and state level. And a number of Irish companies have found their home in Atlanta, including Keeper Solutions.
Absolutely.
Yeah, so I'll stop talking about Ireland now, and we can dive right in. So, you know, when companies are starting on this journey, there's a whirlwind of ideas. How would you suggest that founders bring clarity to their ideas, especially in terms of functionality, features, and architecture of that MVP?
Yeah, absolutely. So we use the design sprint, and that's a lightweight process that takes place over 2 to 4 weeks. And during that, it's led by product designers, and we try to kind of understand the personas, the user journeys, and really the problems that the product is being designed to solve. So it's a good way to kind of work with the founders, really to clarify what it is that their product is doing. And then later on in the design sprint, I think you can define the technical architecture that the product needs based on what it's doing. And in fact, we've upgraded the design sprint to an AI workflow during it, so that so the product can take advantage of the latest AI technology. We can delve into that a little bit later.
That definitely sounds like something that could be useful for startups. I might actually just take a moment and open it to the audience. By show of hands, how many founders do we have in the room? Okay, a few. And how many of you are familiar with the design sprint approach, or something like, have you used it or something similar to that? Yeah, okay, a few. So thank you so much. That kind of gives us a general idea of how familiar people are. Could you give some key outputs from?
Yeah, exactly. I mean, having an clickable prototype is very helpful. You can test it on users. I think that you can get 80% of all the product feedback that you might need from just testing it out on 5 users. So that's useful straight away. The design sprint is lightweight and it's not expensive to run. So if you can figure out how many, you do your changes in the design sprint as much as possible. Now also, if you're going to talk to VCs, they'll want to see, the prototypes so they can understand what the product is. So I think the outputs of the design sprint could be the inputs to making an investment decision, but also could be inputs to the development process that will follow. So, I wouldn't advise anybody to go near a development process unless they've really done a big design sprint before.
That's a good point. And another thing when companies are starting up is, it's kind of sometimes difficult to strike that balance between cultivating an in-house team versus outsourcing certain aspects. How would you suggest companies approach that?
Sure. Well, I think having a kind of business founder and a technical co-founder is a good place to start. And I think that the product market fit is really the essence of what the startup needs to be thinking about. And having that in-house and some technical capability is good. As a company gets, say, seed round investment, they typically need to scale. So the choice that the startup can make is that they would hire to expand. I think that they should do that. But also, a lot of startups, they outsource to a technical partner to help them to scale their development capabilities. So I think having those core things around the product market fit and some technical capability in-house, but then be able to engage in a partner that can help you to scale quickly. I think that's important. Yeah.
Absolutely. And I suppose you mentioned technical partner. What would be some attributes of a good technical partner, or what should companies really think about when they're a partner?
I think finding the right partner is important. You should think about their knowledge of your industry, their size, their specialization, their location and time zones. Are going to live here locally, or will be a remote team. I think you should think about cultural fit as well, and really. If a startup can get an appropriate partner like that, but one that is committed to their journey, then I think that can be a good success factor.
Yeah, I suppose another factor would be funds to have that partner, which brings us to raising capital, which we all know can be quite challenging for startups. How would you, from your experience, how would you suggest founders approach their seed round?
Well, as I mentioned, having a clickable prototype, having a great understanding of the market is very important, and I think the investors will want to see that there's a possibility of getting a good return on investment. Now, one thing I would mention is that I would suggest that founders talk about reserving some stock options, actually, not only for their own team, but also for members of their outsourced development team, because by doing that, it's a bit counterintuitive, but you can get great alignment between the startup and the outsourced company if you use the stock options in that way. That's
fascinating, actually. I don't think many people would think of kind of reserving the stock option for an outsourcing team, but I feel that I completely agree. I think inclusivity is so important for any success. So that's great.
Yeah, and in fact, we've helped a number of companies go from from the very early stages to scale up and do exits on a few $100 million. And we have seen that some of our developers, have missed out on the liquidity events of products that they've been very much involved in building over a number of years. So actually now we start negotiating with our clients, and we're allowing them to grant stock options to members of our team as well. And that's really that's a real partnership then at that stage, and that there's great alignment and commitment.
That's amazing. Yeah, that sounds fantastic, actually. So I suppose to summarize, we kind of spoke about having that clear roadmap to MVP, balancing between in-house teams versus outsourcing, raising funds, but let's touch on something that's on everyone's minds, which is data. And I'm just also mindful of time, so we might kind of make that our wrap-up point. But just how would companies, prioritize their data sources to train their AI models? You could just talk about that.
Yeah, well, as I was saying, we've kind of upgraded our design sprint to take in, AI specifically. And what we recommend is that it's very important, if you're going to deploy AI in your product, that you identify a problem that you can solve that creates value, because there's no point spending a lot of money on optimizing for something that doesn't matter to your users. So we try to, in workshops, identify. We do kind of 360 audit of all the possible sources of data that the company could use for training models. And then we talk about what are the top kind of use cases that would create the most value in the product. And then we look at which ones of them are feasible in terms of the data that they have. And then we would try to spin up a quick POC, proof of concept, at the end. That could be user tested. So you can, again, use that kind of lightweight, design-led kind of approach to identify what are high-value, impactful, and feasible kind of AI-driven features for your product.
Fantastic. Yeah, thanks so much for that. And just any final points? I know you have a blog post on your webpage, so if anyone wants to learn more about this topic, you can go to Keeper Solutions online. You can find more information there. Any last thoughts?
That's it. If you're interested in the topic, please go and have a look on our website. And also, there are grants of $200,000 available to startups for cloud services. So we give some tips like that on our blog post. So go and have a look. And
Amazing. Thank you so much. Thanks, Steve.
Oh, it's a pleasure, Maria. Thanks very much. And thanks for
All right, we're going to go ahead and get started with our final deep dive session here. The coming revolution of embedded payments. Earlier today, we talked about the world of business payments. Now we're flipping the script to examine the coming revolution of embedded payments and what that means for small businesses, fintech, financial services, and the end consumer. Allow me to introduce our panelists. I'm going to slip over here and see as I quickly change that seats. No, they haven't. They're sitting in the order in which they are. So Lizzie, Guynn, partner of TTB Capital. Robin Greer, CEO of RoadSync. Joshua Silver, who is SVP of Technology and Digital Officer. Nope, nope, I got you. Josh, we are founder and CEO of Rainforest. I was getting the company right. Founder and CEO of Rainforest, so ignore the left up there. And last but not least, Aleksandra Teichman, who is the head of U.S. Acquiring, Business Development, and Strategy for Cross River. So with that, I will go ahead and throw it over to Lizzie to start the conversation.
Perfect. Thank you so much. Thank you all for coming. I know we're right before lunch, so everyone hold out a little bit longer, and then we can eat after this. I'm Lizzie Guynn. I'm a partner at TTB Capital. We're an early-stage fintech firm investing in seed and Series A stage companies. Many of you may know us. We've been in the Atlanta area for about 23 years, and we're so excited to be here. Huge thank you to Fintech South for hosting us this afternoon. We have an awesome set of panelists. I'm going to pass the mics over and let each panelist give a little bit more context on their role in their company, and then we'll dive into embedded payments.
Hi, my name is Robin Gregg. I'm the CEO of RoadSync. We are a transportation payments company here in Atlanta that digitizes and automates real-time payments in the U.S. trucking industry.
Good morning. I'm Joshua Silver, founder and CEO of Rainforest. We do embedded payments for software platforms. So any type of vertical software company that wants to add payments capabilities, whether it's credit card acceptance or payouts, we make that easy for them.
I'm Teichman, head of U.S. acquiring for Cross River Bank. Cross River is a fintech infrastructure provider. We're technically a bank, chartered in the state of New Jersey, but really our core mission is to enable fintechs, embedded payments, embedded finance through various partners like Stripe, Checkout, Upstart, Current is a recent one that we launched.
Perfect, thanks. I think a great place for us to start is really the topic of this panel. 75% of payments are projected to move from banks to tech platforms by 2030. Embedded payments is a super hot space in the investment community. TTB has backed Payably in the space. All of you operate in and around the space. I would love to hear your perspective on why you think embedded payments is such a hot topic. And embedded payments gets thrown around a lot, so it may be helpful for you just to define what you mean when you say embedded payments.
Well, I'll start. I think when you think about the history of financial services and the way they were offered to, whether it's consumers or to merchants, it really always came down to the bank, right? If you wanted either a loan or even a merchant account, a couple of dozen years ago, you had to go to your bank. And then there were sales channels that percolated ISOs, different processors had different types of channels. But as you continue down that path, in order to enable financial inclusion, fintech started saying, well, how do I leverage technology and offer offer financial services out into the ecosystem, leveraging tech. And so fintech became the hot topic, right? It became a hot word for some time. I think embedded payments is just the next iteration of that, is really bringing those same financial services down to the consumer and down to the business where they traditionally hadn't seen it before, whereas fintech is truly a financial service being enabled by a technology company that owns a lot of the compliance and a lot of the not so techy things as well.
Yeah, I would agree with everything that Alex said. I think from Rainforest's perspective, we really look at historically software companies sold software, banks sold financial services. You started with, they were completely disconnected. Think about an old school dry cleaner that just had a disconnected terminal. Then you move to integrated payments where there was some technical integration, but there's really no commercial integration or user experience integration. Finally, with embedded, you have software companies that are selling both software and financial services together that, of course, are enabled behind the scenes by sponsored banks in the US. But really what this does is it allows your end customers, merchants, businesses, consumers even, to have a unified experience. And so rather than going to your software company with software issues and your bank for bank issues, you really can go to the software company and they have everything together in one. And that really improves, I think, the economics for the software company. It improves the user experience for those end users, makes the clients more sticky. And so we really, I think, as an industry, are still early in this journey, but having lots of signs that this is going to be the way of the future.
For us, we take a vertical lens on this. Obviously, we are serving a specific industry in that we're serving the U.S. transportation market. And, we've always had payments, but a lot of vertical software providers have added payments in a way to make their platforms stickier, more valuable. It's a great revenue stream. Getting paid or working on paying people is something that these businesses are doing each and every day, so it increases engagement with the platform. And so for us, we thought that we started with payments for the transportation industry, but we love to sort of add things that are really central to how these businesses are run, and that having the vertical specialization of it really makes sense because it's really unique to how these people are operating their businesses. And so payments as embedded payments is a natural evolution of that. Thanks, Robin. That's super helpful. And in terms of thinking about what industries embedded payments makes the most sense in, outside of the industry that you're operating in today, where do you think we can benefit from embedded payments across the ecosystem?
I'll start. I think one of the things that's most exciting to me about embedded payments is it's cross-vertical. Almost every type of software company has some type of transaction. Whether you're a business management system and you're in the services industry, whether it's point of service in retail, any time that you're transacting goods or services, which ultimately most companies are doing, there's a payment that takes place. And so in a lot of ways, I think payments is the universal language. We've seen historically some early verticals where this made a lot of sense. Healthcare, I was a co-founder of PatientCo before here in town, which did healthcare payments for large health systems. That was kind of an early adopter. You saw it with folks like MindBody in the gym and membership management space. We saw it with companies like Toast, which is obviously in the restaurant space. But I think now we're seeing all different kinds of verticals, whether it's trucking, transportation, logistics, construction. A lot of these B2B verticals that historically have operated entirely offline and are now moving through that digitization efforts.
Yeah, I mean, agree with everything you said. I think B2B is a big area of opportunity where there's still a lot of checks, there's still a lot of paper, and so enabling payment organizations for cross-border, enabling payment for fintechs that go after those verticals. We see a lot of kind of white space and a lot of partners coming to us. Generally, the way we look at partnerships at Cross-River is the fit is not necessarily the vertical, or although there are verticals that we focus in, for us it's a matter of is there a fit. From a technology perspective, unlike most banks, we have our own homegrown core. So our bank core is all based on API technology, and so does the partner have the resources, have the wherewithal to connect to us via API, and then of course from a compliance standpoint, do they own some of the components that are required in order to really stand up and partner with an infrastructure bank? So we really look at it from a fit perspective versus from a specific vertical, although we do believe, and I think the industry has seen a lot of success when you focus on verticals such as RoadSync, right? When you think about how do I deep dive into a specific customer set and really offer them and solve problems for them, and that becomes immensely valuable.
I think there are so many software companies that don't have payment-specific compliance departments, and that's a huge part of payments, as we all know. I'm curious how you all view this particular aspect of embedded payments and embedded finance, and how software companies should be thinking about how to operate in the most compliant and best-in-class way when adding payments, which every software company is feeling pressure from the market to monetize transaction volume and not just have a SaaS fee. So how do you sort of marry those two things together?
So it's a huge lift to be fully compliant when you think about doing payments. And I think people really underestimate how hard it is to sort of support payments and manage risk, manage compliance. We did it ourselves in the beginning. We were actually moving on to the Rainforest platform for a lot of reasons, but one of them is as we scale, building up the infrastructure around merchant underwriting, managing transactions, monitoring transactions, managing fraud, complying with all of the network rules. All of that is just really burdensome and kind of limits our scale, and also causes us to be probably a little more cautious about how we expand our payment capabilities than we'd otherwise be for a partner. And so I think it's a hard thing to undertake. I think people underestimate it because it's kind of easy to get started with a Stripe, but once you start to get to some scale and want to have better economics, really thinking of and being thoughtful about how you are going to manage that complexity is, I think, important.
So a few years ago, the common or conventional wisdom was that every software company was going to be a fintech. Our good friends at Receivable had said that, Angela Strange. I actually disagree with her. Wholeheartedly disagree with her. Every software platform wants to embed financial services. They don't want to be a fintech. And it's taken a couple years, I think, for the industry to wake up and recognize that there's a huge gap between embedding services and making money and providing good experiences and being a true fintech. And I define a fintech as someone who is kind of principally involved in the money movement and compliance and regulation and all of those kind of payments things. And that's really, I think, the reason why Rainforest exists. And I think it's not an accident we're sat in this order on stage. We've got a vertical software company. We've got a bank. Rainforest sits in the middle as an enabler. And there's many of other enablers as well out there. And I think there is a huge market for enablers because software companies like RoadSync realize it is really challenging to do the compliance. And it has only gotten harder in the last few years as regulation has increased. The card networks have added more and more regulation and compliance obligations. I think in the wake of some of the bank failures earlier this year, financial institutions are really taking a hard look at who they're working with. And you have to have not only the financial strength and wherewithal to perform all of those compliance obligations, but you have to have the talent. And that we find is one of the biggest problems in the industry is there just aren't enough qualified professionals. If you have 10,000 software companies in the US, you need 10,000 head of compliance, 10,000 head of payments. we don't have 10,000 professionals, unfortunately, that are trained in embedded payments yet. There's hundreds. And so you need to have enablers and aggregators and other types of distribution channels in the middle to really help spread that talent.
I think what this kind of our macroeconomic environment has done for our industry is kind of, it's bittersweet, right? Probably more bittersweet, but there is a silver lining in that anybody who's starting up or at a place where they are growing their fintech or their payments company, they've realized that it's not a matter of how do I boil the ocean and how do I take over the world and do everything they want. But practically building a solution and solving problems and it's about the journey. So you don't necessarily have to go and build out your own core processor from day one. And whereas a couple of years ago, I think a lot of people were saying that, and everybody wanted to be infrastructure. Today, I think a lot of smart founders are realizing, let me crawl, walk, run, versus trying to take over the world. And do everything day one. And so providers like Rainforest, providers like RoadSync are there to help you kind of get there and scale before you go to a bank directly and connect to a bank for example, or enable real-time payments, for example, directly. But when you're ready for that, I think everybody made this point, compliance becomes a big undertaking. But with that comes a lot of autonomy and a lot of also flexibility in what you can do and how many products you can offer. So it's about, I think it's about the journey and getting to where you want to be as a fintech or as an embedded payments company.
So for the companies building in the embedded payment space, how should they be thinking about exit and how to be creating value outside of the public markets? We've obviously seen how Stripe and Adyen are performing, Adyen particularly in the public markets these days, and just in terms of investor sentiment in the payment space and in building an embedded payment startup, either something like RoadSync or Rainforest. How are you guys thinking about how founders should be building and creating value today?
I'll start. So, I think specifically with Stripe and Adyen and others, I think they've really proven that there is a mass market opportunity here for tremendous scale. I'll leave the valuations and price sensitivity to kind of the public analysts out there, but I think as a macro point, the entire industry is growing tremendously. You had the stat earlier that by 2030, 75% of all payments will be facilitated by a software platform, not a bank. If you kind of double click into that another level or two deeper, essentially all of the newer processors, Stripe, Adyen, Shopify, and kind of the Squares of the world, collectively represent still single-digit percentage of payments in the US. The vast majority of volume is still sitting with the scaled incumbent processors out there, the Chase Payment Techs of the world, the TSYS, the Fiservs, and Global Payments. And that volume that's on the newer processors is going to double over the next 10 years. And so we're literally going to double the size of Adyen and Stripe and all the others. And at Rainforest, we don't believe that all those companies are going to just double to make that up. We think that entrants like Rainforest and other enablers are really going to help the market with that transition faster. And then I think the final point is for anyone who has a software company or invests in software companies, you really need to be thinking about data ownership. When I was consulting before I started Rainforest, I saw a lot of times software platforms had essentially entered agreements where they were referring merchants or referring their customers over to processors. And it would come time for an exit, and everyone was excited about the payments volume, but they quickly realized, well, you don't really own your customers. You can't move them over. And so portability of data and portability of customers is something that's not being talked about as much as it should be yet, but absolutely will be in the next 5 to 10 years. And Rainforest is really proud that we're one of the first processors to contractually guarantee that we will give you your data and that you own it, both on a legal perspective and a technical perspective. And I think we're a forerunner there, and we'll see others follow suit soon.
Yeah, current market aside, and it's been a crazy kind of 12 months in the public and private markets for all tech. There is so much opportunity in the space, and I think payments and verticalized payments, embedded payment solutions are just in their early days, and they are very attractive businesses. And so I think that is going to continue to be an attractive business to build. I think it's going to be an attractive business to sell. I think there's all sorts of traditional processors that are looking for ways to modernize their platforms and offer quite frankly, stickier products. I mean, we actually charge, for our credit card processing in our system, we actually charge much higher, probably 50 basis points higher than the market average rate, because we actually provide so much value. And our logo retention is in the 90s. Our gross retention is, about 120%. And so it's a very attractive, sticky product. And I think that's going to be attractive to other people. It does build a durable business. And so I think that's ultimately what you want to do. And I think it's a good time to do it. It's a good space.
If I can just add one point on top of that, I think that's an interesting point you brought up, which is we talk a lot in the payments industry is about everything being commoditized. And you're living proof, and we see this time and time again in different verticals, that if you are driving value by embedding payments, you actually attract better economics. And so this isn't a race to the bottom. I don't see it in our industry. I think in kind of standalone payments where it's just a terminal and there's no value add, there's no integration, absolutely it's a race to the bottom. But if you are creating these rich embedded experiences, there still is a tremendous amount of value to be unlocked there.
So a couple of things about, I think the question you were asking is kind of driving value and building your, as a founder, building, and how do you look at your exit? So a couple of things. One, when you think about payments, it's not just purchases, and it's not just credit cards. I think traditionally, especially in a card-present environment, that may be the case. But as you look at kind of, not even the fringe verticals, right? Even if when you look at B2B and some of these other verticals, it's not just credit card acceptance. That's still, by and large, a big chunk of it. But how do you offer interoperability to your consumer, to both your businesses and to their consumers, and enable other forms of payments, whether it's a pay-in or a payout? How do you enable a push to a debit card, and learn more and educate yourself about different flows of funds and whether that's relevant or not for your customers, whether they're software companies or direct retail customers and so on. Being able to embed richer payment options for your customers, I think, goes a long way when you are building a payments company, or you're offering embedded payments to your whether it's software or merchants directly, because you're not just offering one form factor. You're not just a payment processing organization or just a kickback, right? Now you're a full end-to-end payments organization, and you're solving problems for your customers in a multi-dimensional way. And that, I think, helps, from a venture perspective, and Lizzie, I'm sure you can speak more to it than I can, but now you've got kind of a larger scope, a larger lens, and more stickiness, right, with your customers, which goes a long way.
100%. We're big believers in the vertical software space, and really where you can own the customer segment and become a system of record across whatever business and vertical you're building. And I think there's a ton of opportunity not only to build in one vertical, but then expand horizontally and add other embedded products, like embedded insurance, embedded lending. And that's really where you can continue to create value for your customers, is offering them more and more products and services specifically tailored to them and their needs, which banks traditionally may not serve. I would like to shift to another popular topic, which is RTP and FedNow, and how, Alex, we're sort of touching on this a little bit, but just how this plays into the embedded payment space and maybe the pros and cons of incorporating FedNow into embedded payment software and payments companies.
It's not a one-size-fits-all solution. Cross-River, just by our sheer nature of our bank, and so we kind of live in the bank rails world. That's our kind of native to our core and what we do from a payments perspective. We have sizable card business as well, but really, what we know best is bank rails, right? When you think about like ACH, real-time payments, wires, FedNow. We've enabled FedNow. We have that available. The way we look at both real-time payments via the clearinghouse and FedNow is that those are just instant payment rails. It doesn't matter what you call them. It doesn't matter who you send your file to, whether it's a clearinghouse or the Fed or NACHA. Those are actual real-time payments. In addition to those, we also have Visa Direct, which is kind of a push-to-debit product that's real-time, near real-time, it's about 30 seconds. So when you think about those payment modalities, right, it's not a zero-sum game where, well, are they going to replace the card rails? I've had that question come up a few times. Are you going to take over the networks and is it going to replace all card payments? I think everybody here knows enough to say no, that's not going to happen. I'm sure there will be some share of market, right, that they take away because as consumers become more educated and Zelle and Venmo become commonplace as a consumer, as a merchant, you kind of want a real-time payment as well. So you want to get paid today. You don't want to wait T+1, T+2, T+3 for your merchant settlement. So in those types of scenarios, I see real-time payments becoming more prevalent. I think where the real opportunity is what I mentioned before, when you think about what else can I do within my vertical, how else can I solve a problem for them. Simple example is gaming, right? And so not just being able to use your card to place a bet online or to do like some sort of online gaming, but also when you get paid out, you want to get paid out real time. And so most of those are facilitated by real-time payment rail. Most of that is being sent through the clearinghouse or maybe now FedNow or the Fed. So it's thinking about use cases versus just a purchase. And how do I enable more software companies or more merchants to accept the payment? What else can I do for my customer? And offer them an additional payment kind of solution where I'm driving revenue.
So we offer real-time payments, push pay to debit, ACH, same-day ACH. We process credit cards. So we have experience with offering a bunch of these types of products. And our customers could care less what it's called, and if it's RTP, FedNow, whatever. All they care about is what it does. And so I think this is to Lizzie, to Alex's point about use cases. It's sort of what is it replacing? What are their alternatives? So trucking is very, very cash strapped. They're trying to move money quickly. This is a place where if you go to one of their trade shows, you'll still see Western Union because they really want to figure out ways to get money fast. So we find that the real-time payments really tend to replace wires, fleet check issuance, Western Union, cash, panicking. Right? So there's just a lot of stuff that we have to position it around. This is what it does, and this is how you're going to get your money. We found the more kind of clinical we are about describing it, the less likely they are to do it, because like RTP or FedNow, that sounds like something they don't want. But we've been surprised by how quickly people will adopt things if it fills a need for them that they really have. And so instant payouts with push pay to debit is wildly popular with our customers because they really get it. Like if these are small business customers and they understand that they're just entering in a debit card and the funds are going to appear there, that's kind of intuitive to them. So I think it's more about what it does.
Yeah, at Rainforest, we built our core foundational platform to be rail agnostic. So we do bank rails and card rails really well. I think most times people do one or the other, and we say, hey, to be an enabler in the software space, we have to do both equally well. And so we're really excited about real-time payments and all the different flavors. I think that being said, the question that I get asked a lot is, what is it going to replace? And I think it's important to remember that for the most part, real-time payments today are push payments. They're not pull. So unlike a credit card where you can go in and pull funds from it, or ACH where you can pull funds from it, both FedNow and RTP don't have the concept of pulling. And so in a bill pay scenario, the payor has to initiate that payment and push it out. And there's a lot of discussion about requests for payment RFPs on both networks, but the adoption on that is extremely low. I'm sure, Alex, you have probably better stats than I do.
The banks need to adopt. It's not about, so the banks need to be enable those DDAs to be able to pull, like 5% of all DDAs are enabled for a pull from a request for pay, basically. It's a big R, little f. But they need to be enabled before any of us can say we want to take a kind of enable or embed a request for payment.
We have just about 5 minutes left, so before we want to make sure the audience has some time to ask questions. So I see, first raise your hand back there. Yeah. If you want to stand up, we can probably hear you better.
Okay. I was just curious, going back to the earlier topic, what are some challenges you're seeing companies face as they start to piggyback on like new types of payments? They're solid in one type, but they're adding on and moving through that. Like what are you seeing?
Just to make sure everyone heard the question. The question is really about what challenges do you see software companies have when they're building out payments?
So I just recently did a talk for ETA's Payment Facilitation Committee around specifically ACH and Reg E. And when you think about PayFacs and just payments in general, right, we're also embedded, and in card. And whether it's a credit card transaction or maybe a push to debit, and as ACH has always been kind of like this older school thing that banks do. We may enable it for some of our customers, maybe not. But as that becomes more and more prevalent, and there's more need for RTP, and now any type of other payment rail that's non-cards within the card network, prepaid debit also is another one, right? Reg E becomes a really big, what's the word I'm looking for? A kind of you need to know and education. So it's a big one. The other one, when I think about any type of real-time payment, is transaction monitoring and real-time transaction monitoring, and having those tools available to you so that you can reduce fraud, you can reduce any type of returns, and really protect yourself. Anybody that's connected to a real-time payment network needs real-time transaction monitoring. So just some of those are kind of the top things that come to mind.
I talk about it as the 3 R's: risk and compliance, relationships with banks, and reconciliation. Those, I think, really encompass the 3 really tough parts of payments. You're talking about money movement, and so as you add more and more rails, they all have different rules around returns, around timing, around fees. And a lot of software companies who try to do this themselves get into big challenges with trying to reconcile the funds, and they get their ledgers and their bank balance out of whack, and it's a massive, massive problem to unwind. On the bank relationship side, we talked about that earlier, there are still relatively few sponsored banks in the US that have the full breadth of services. I think Cross River is one of the few that really does kind of have end-to-end. Most cases, people are piecing them together. And so you may end up with 2, 3, 4 sponsored banks. It's hard enough to manage your relationship with one bank and get underwritten by one bank, much less 2 or 3 or 4. And then on the risk and compliance side, there is a lot of fraud that happens, whether it's merchant fraud, whether it's consumer fraud, whether it's friendly fraud. And it is not a question of if you'll get bit by fraud and losses, it's a question of when. Anybody who deals with money movement is a target, and if you are not hyper-vigilant and watching it 100% of the time, you will have losses. You need to have someone that either does that in-house and really is an expert, or better case, I think, is to outsource it and offload your risk and losses to someone else.
Yeah, we'll take one more question from the audience. In blue.
So this, I guess, is where Joshua was talking about, or anybody else can answer. We're talking about that you're involved in a lot in the compliance side, compliance. When you say compliance, there's a lot of, like with a lot of pieces, a lot of people. Is it, we just talked about just now, transaction monitoring software, AML, anti-fraud, or what is it that you provide these payments companies? What is it that they get by joining?
Yeah, so it's a great question. I think, the question with compliance is how long do you have to talk about it? Because we could be here for a long time. I think you've got 3 or 4 flavors of it, and Rainforest kind of takes on the burden of all of it. We provide it as a service as opposed to here's some tech to run it yourself, so it's our people that are running that day in, day out. But you're looking at things like sanction screenings, making sure that you're not transacting with any bad actors that you should, OFAC and AML and things like that. It's also compliance with card brand rules, it's compliance with all of the bank's policies and procedures, it's compliance with the NACHA rules, FedNow has different rules, RTP has different rules. So there's a whole regime of regulatory compliance that has to happen there. And then you have the risk side, which is anytime you have credit that's being extended, so in payments you have the risk of chargebacks and payouts, you have a risk of those funds that were provided being bad. It's across that whole spectrum, and you, depending on your vertical and your industry and your flow of funds, that impacts most which you need to be most concerned with, but kind of all of them apply at any time you're touching any type of funds in the U.S.
Perfect. Well, I think we're at time, so thank you all for participating in the panel today and for all attending, and we'll stick around a little bit longer if you want to chat afterwards.
Thanks, everyone.